Hey there, it's Minh, your go-to financial guru. Ever been puzzled by how inflation works and why it affects the rich, middle class, and poor so differently? Is it down to their education, financial status, or maybe the assets they own? Today, we're diving into this mystery using Christina's story as a real-life example. Plus, stick with me because I'm going to reveal four powerful investment strategies that can hedge against inflation, no matter where you are financially, and even help you thrive while prices soar. Let's break it all down.
This milk was $1.10 last week. Now it's $1.30. 2 years ago, it was just 50 cents. What is going on?
Hey there, Christina. You look like you've just seen a ghost.
Hi, Minh Guru.
Christina is a practical, family-oriented woman in her 40s, keenly aware of household expenses and the impact of rising costs. She's observant, financially cautious, and often concerned about how inflation affects her family. Despite her worries, Christina remains resilient and open to advice, always looking for ways to navigate financial challenges.
Shopping for the whole family, and I'm about to lose my mind. Everything is getting more expensive every day. My husband's salary feels like it's stuck in quicksand while the cost of living keeps rising like a rocket.
Sounds like inflation has you in a chokehold. It's the hot topic everywhere, isn't it? You know, inflation is like a double-edged sword. It can either make you richer or poorer, depending on where you stand.
Yeah, but it's so confusing. All I know is that prices are skyrocketing. What does it even mean for us?
Great question. Most people only get the gist of inflation. They know it means rising prices, but the implications are much deeper. It's almost like a financial fog that clouds our judgment. Some see it as a necessary evil, while others consider it a thief in the night, robbing us of our hard-earned money.
Tell me about it, but I feel like it's all bad news. Isn't it true that we're all just getting poorer?
Not necessarily. Surprisingly, the rich are often insulated from inflation. Their wealth is tied up in assets like real estate and stocks, which tend to rise in value when prices go up. Plus, when inflation kicks in, the value of their debts goes down. It's like a financial magic trick that makes them even richer. But the poor have it differently. They typically don't have much savings or assets, so inflation doesn't hit them as hard. In fact, it can actually be a blessing in disguise. Their debts become less burdensome, and they often benefit from government support during crises like those stimulus checks during the pandemic. The middle class suffers the most. You see, they tend to hold a large portion of their wealth in cash, which loses value in an inflationary environment. Plus, those big houses and shiny cars, they come with hefty maintenance costs. Unlike the rich, the middle class can't just throw money around without feeling it.
It's like a never-ending cycle of stress. So what can we even do about it?
Understanding inflation is key. Inflation can be a hidden blessing for those who are prepared, while for others, it can be a silent killer. It's about recognizing its dual nature and how it affects different people. To hedge against it, think about adjusting your asset allocation.
Thanks for the pep talk, Minh. Next time, let's talk hedging strategies over coffee.
And there you knew how inflation impacts the rich, the poor, and the middle class. But that's just the beginning. Up next in this game-changing video, you'll learn how to not just survive inflation, but thrive. Find out which industries and assets can make you wealthier than the rest. To hedge inflation, it's important to avoid holding too much cash. Instead, consider investing in assets that grow over time. Even if you can only invest a little, starting small allows compounding to work in your favor. You may watch the following video to know how the compounding effect works. Real estate is one of the most reliable hedges against inflation because property values and rental income generally rise in tandem with inflation over time. As the cost of living increases, so does the value of real estate, ensuring that your investment maintains or even grows in purchasing power. Even a modest property investment can accumulate significant value in the long run due to appreciation and rising rents. For those who prefer not to manage physical properties, our EITS Real Estate Investment Trust offer a more accessible alternative. Our EITS allow investors to gain exposure to the real estate market, generating steady income that typically adjusts upward with inflation, making them a practical choice for inflation protection. Invest in inflation-resistant industry stock. Certain sectors tend to perform well during periods of high inflation. Banks benefit from the increased net interest spread, while insurance companies can earn more from higher interest rates. Essential industries like utilities, consumer staples, and energy companies can pass on rising costs to consumers, maintaining their profitability. Investing in commodities such as gold, silver, and oil is an effective strategy to hedge against inflation. These physical assets have intrinsic value, unlike stocks or bonds, which are tied to the financial health of companies or governments. This detachment from financial institutions makes commodities less susceptible to inflationary pressures. Gold has long been seen as a safe haven during economic uncertainty. Unlike currencies, it isn't tied to any government or central bank, making it less vulnerable to inflationary pressures. Its value typically holds strong when markets are volatile. Silver, while offering similar protection, has the added benefit of being in demand for industrial uses, which further supports its value as an inflation hedge. Both metals provide reliable options for preserving wealth. Oil, a vital commodity, often experiences price increases during inflation due to rising production costs. Additionally, the finite supply of commodities drives prices higher when demand grows, particularly during inflationary periods. This scarcity, combined with increasing demand, makes oil and other tangible assets a strong defense against the erosion of wealth caused by inflation. By investing in commodities like oil, investors can protect their purchasing power and potentially benefit from rising market values as inflation takes hold. Treasury inflation-protected securities (TIPS) are U.S. government bonds designed to safeguard investors from inflation. Unlike regular bonds, the principal value of TIPS increases with inflation, as measured by the Consumer Price Index (CPI). This inflation adjustment ensures that both the interest payments and the final payout at maturity maintain their purchasing power. As a result, TIPS provide a reliable investment option for those looking to preserve wealth during inflationary periods. Investing in foreign currencies from countries with lower inflation rates can be a strategic move to preserve or grow wealth. When a currency comes from a stable economy with low inflation, its value is less likely to erode over time. Investors may benefit from favorable exchange rates and potential appreciation in the currency's value. This approach can diversify portfolios and hedge against domestic inflation, though it also carries exchange rate risk. I hope you found this explanation helpful and easy to follow. Comment below if you want more video like this or advanced knowledge on how inflation affects the rich, the poor, and investments to hedge against inflation. Thanks for watching, and remember, understanding finance is the first step to making informed decisions. Subscribe to watch the next video.